Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. Yesterday was an absolutely brilliant example of not only multi-time frame analysis on the YM, which we're looking at here, but also how we then filter the MTPredictor trade setups, which you can see on the chart here, in the direction of the large degree trend using our higher time frame charts. Remember, we have an old indicator, which is our STF indicator, which is color coded, but we now have moved to teaching using the higher time frame support and resistance zones, because that is it's a far more accurate way of gauging support and resistance, and I just want to show that again in this example. So what do? Well, we go to the higher time frame chart first. This is normally 3 to 5 time frames higher than you're trading. So if you're trading daily charts, you look to the weekly. If you're trading, say, 15-minute Forex, you look to the hourly, or in this case, if you're trading the 3-minute YM, you then look to the 15-minute charts. Let's go out to the 15-minute chart and see what we can see. The swing pivots are placed on your chart for you automatically by the software. So yesterday, you can see, which was the 15th of July, the market came down here, made a new low, and started to rally. Once it started to rally, you then go back to the prior pivot high, which was here, right mouse click, place the DP level on, and that gives you an area of resistance. Remember, that's on the chart in advance before it even gets there, and perhaps I can use training mode or our chart playback to show that in reality. There it is, the market's made the pivot low. We now right mouse click here, we now place our DP on. Can you see it's how it's on the chart in advance? So now as the market goes up to it, it gives you an area of potential resistance before the market even gets there. As the market starts to come down, you can do it again. You place the DP off the last pivot low, which is off here. Can you see how that's on the chart in advance? It's there before the market even gets there. So let's now see what happens. The market goes down, goes up a bit, goes down, makes the low, and if I turn training mode off now, you can see that that DP there again caught the very low of the day. So here we are yesterday with our DPs being placed on the chart in advance, nailing the high of the day on the YM for you in advance, and then nailing the low of the day for you in advance as well. So how do we use these on the shorter time frame? Well, we look to gauge our trades in the direction of these DP support and resistance. So here's the whole day yesterday. So you can see as the market was rallying up, the large trend was up because it was up into that resistance. Therefore, you'd have avoided that sell setup. The market is then reversed at that resistance level. The large trend would then be deemed down. It would be deemed down until we hit the support zone. Therefore, you'd avoid this buy setup here, and you'd be taking the sells. Now, there were a couple of sells here. There was one there. There would have been a losing trade. Remember, losing trades can and do happen. That's why we use correct position sizing. Plus, because that was such a small bar, I don't know whether you'd be trading 20 contracts anyway, so you might have actually just passed on that one. But nevertheless, there was a TS4 sell here. That then would have had a short-term trade on the short side there as well. Just on the first target, the profit of 2.8R would have been 2.8 times greater than the initial risk, which would have more than made up for the previous loss. But the point being is that these larger degree trend support and resistance levels will gauge levels in between which you want to be trading. In other words, they gauge the larger trend for you. But not only that, we can also use those to adjust our trade management strategies. So for example, if I just take this analysis off, clear all analysis, we know that this TS4 here is the first correction after the first move of an important high. In other words, in Elliott wave terms, if I put the major Elliott waves on here, Elliott wave major, you can see that this is the initial decline. In Elliott wave terms, this will be deemed wave 1. This is wave 2. Wave 2 then subdivides into a minor ABC. If I put the Elliott waves intermediate on, you can see that. There's the ABC. We then anticipate the market is then going to move down into at least the typical wave 3 WPT. So that's why when we place the analysis on here, we're not looking for a profit target here. We're looking for one at the wave 3 WPT. In other words, we're looking for a wave 3 type of swing. So in other words, that would have taken the trade to be a much larger profit into approximately 5.8R, or you may have even wanted to run it a little bit further into the large degree support zone. If you had, then that would have increased the profit even further down to 6.9 or almost 7R. So either 5.8 or 6.9R. Very, very nice trades indeed. Now I know some of you worry about the initial decline here being a bit choppy, so one thing I do actually suggest people do is always try to trade off the cleanest and clearest and most obvious charts. So perhaps just have a skip over to the slightly higher time frame chart. And here we are. Here's the higher time frame chart. You can see the move up into our 15-minute DP, nailed the high of the day, and again our 15-minute DP down there, nailed the low of the day absolutely perfectly. But this is probably a little bit clearer and cleaner pattern for you. You can see that the initial decline off the high is just one clean swing. Then we get a nice simple ABC correction. You can see it ABC correction up into that TS3 cell. So now if you place the analysis on here, this may be a cleaner and clearer trade setup for you to visualize. So it may be a better one for you to take. Remember, our profit is not at the first target there, it's at least at the typical wave 3 WPT, which is down here. So that would have been one short trade for 5.1R profit, or as I've already suggested, you may well want to come down into the large degree support zone for a nice 6.1R profit there as well. But either way, can you see how by using the larger degree support and resistance zones, they give you areas of support and resistance that are on the chart in advance. We can then use these to gauge the large degree trend, and we want to trade in the direction of those. The favorite trade setup of mine, and that's why MTPredictor was developed many years ago, is what I call the Holy Grail trade setup, which this is a perfect example of where we're coming off a major turn. In other words, I define this as an important high or low because it unfolds at higher time frame support or resistance in this case. The initial decline down is then wave 1. The initial correction back up again unfolds as a lesser degree or minor ABC. That is wave 2. We're then looking for a move into the typical wave 3, and that is into that area there. Why do I like these? Because wave 3s are typically the strongest and longest swing in a completed 5-wave sequence. Therefore, be able to catch the vast majority of that wave 3 swing gives the largest profit potential for the smallest initial risk. So a very good example of a Holy Grail trade setup there. And again, it depends on how you want to look at the chart, whether you want a nice clean, clear pattern. In that case, the 5-minute chart was slightly better, or on the 3-minute chart, exactly the same kind of trade setup there as well, but it might be slightly choppier. But either way, can you see how, because we had these larger degree support and resistance zones on the chart, if I go back to the 5-minute chart, it's probably a bit clearer and cleaner. These larger degree support and resistance zones gauged your large degree trend, and you can see here is a lovely example of catching the high of the day there. And look at that, what a great place for support to have that on the chart in advance to catch the very low of the day there before the market rallied. For you guys who are really advanced, just out of interest, just show you this quickly. Here's our low of the day on our 15-minute support zone. You can see it there, and just look at this. The market rallies up, it makes an initial rally up, it then makes an ABC correction down into there. If I do the ABC on the elliott wave intermediate, you can see there's the ABC. That's the initial correction before the big rally came off. So that would be wave 1, this would be wave 2. More advanced traders could look for a long position there to catch the rally up into the close. So another way for even more advanced traders to do that, but I don't really want to look at that because there wasn't an automatic setup there. I really wanted to focus on the 3 and particularly the 5-minute chart because the pattern was nice and clean and clear. We can see our TS3 cell set up there. One short trade down into there into at least a return of 5R and maybe 6R coming out at almost the low of the day. So a great example of how to use multi-time frame analysis using the MTPredictor software program to gauge some lovely trades on the YM yesterday, and how our large degree support and resistance zones on the higher time frame charts nailed both the high and the low of the day for you. But more importantly, they were on the chart in advance, so they were there before the market even got there, preparing you for these particular levels and the large degree trend direction change. So a great example of using the MTPredictor tools yesterday on the YM.